Cathie Wood, a longtime supporter of Tesla and Elon Musk, has dropped a huge bombshell concerning Tesla and the electrical vehicle market that is sure to have an impact on Tesla stock. She's a top stock picker and founder of ARK Invest, a $60 billion assets firm that invests in cutting-edge technologies including self-driving vehicles and genomics. Wood is one of Elon Musk's most ardent backers, and she expects the electric car firm would ultimately be valued at over $3 trillion. But with stock prices falling following Tesla's postponement announcement of new models, investors have been a bit skeptical lately. What's her take on the electric vehicle market? Where does she see Tesla in the next 5 years? Will it positively or negatively impact Tesla stock prices? Keep watching to find out. Tesla Incorporated, the automaker and energy corporation, has had a turbulent start to the year, with stock prices dropping from $1,236 in November 2021, going lower and eventually increasing by 5.33% to $922.43 on the 16th of February. Recent dips in tech companies, according to Wood, have generated buying opportunities. In an interview, Wood stated that there's been a shift in consumer preference towards electric vehicles and that this has been backed up by statistics. According to data from Bloomberg New Energy Finance, electric vehicles, which include battery electric and plug-in hybrid vehicles, accounted for 7.2% of worldwide cars sold in the first half of 2021, rising from 2.6% in 2019 and 4.3% in 2020. Electric vehicles accounted for 3% of sales in North America in the first half, but industry watchers predict a rise to 5% in the second half as sales ramp up. Increased electric vehicle sales were announced alongside a pledge from General Motors, Ford, and other automakers to make all new car sales zero-emission by 2040. In this interview, Woods also noted that the stocks of these electric vehicle manufacturers soared after this announcement, and that this could indicate a growing demand that outweighs the supply. General Motors and Ford stocks have risen this year as investors recognize their efforts to transition to electric vehicles. But electric vehicle manufacturing is not something the legacy players are used to, because they were born in the industrial gas-powered era, according to Wood. Sales of electric vehicles are increasing rapidly in tandem with the construction of charging point infrastructure, thanks to rising customer demand, increased vehicle availability, and government backing. In 2020, consumers spent $120 billion on electric vehicle purchases. That's up 50% from 2019. This translates to a 41% increase in sales and a 6% increase in average prices. Woods highlighted that Tesla is already ahead of its competitors, dominates the electric vehicle market, and will continue to do so based on its technology choices. General Motors announced that it will invest $6.6 billion in its home state of Michigan between now and 2024 to enhance electric pickup truck production and construct a new electric vehicle battery cell plant. The increased investment is part of General Motors' aim to expand its North American production capacity to 1 million electrified vehicles by 2025. By mid-decade, General Motors expects to have sold more than 1 million electric vehicles worldwide, surpassing Tesla as the biggest US-based seller of electric vehicles. Other automobile brands like Hyundai and Ford aren't lagging too far behind either, but it will take a substantial period for them to catch up. Other than Tesla's pioneer status in the electric vehicle industry, a few things set it apart. For one, Tesla's battery distribution network is a key part of the company's competitive advantage, since its batteries are regarded as superior to those of competitors. Why? It's partly due to the high quality of Panasonic's battery cells. Add in Tesla's ongoing improvements to the battery packs and the chemistry. For the past 3 years, Tesla has accounted for nearly 74% of all electric vehicles sold in the United States. The explanation is simple. Its cars go further. Depending on the model, the Tesla Model S has a range of up to 412 miles. Ford's Mustang Mach-E extended range variant is the closest competitor that isn't a luxury vehicle. The Tesla Model 3 follows, shortly followed by the Model X. Wood remarked that it would take a while for other original equipment manufacturers to level up to Tesla's pace, because for most automobile brands, the electric vehicle models contribute only 2 to 3% of their revenue, and to increase those numbers, a complete overhaul would be necessary. This will take a lot of time and resources. Meanwhile, Tesla continues to advance in sales and technology. If Tesla is the first to be successful in autonomous vehicles in the United States, we're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we believe that it could take 20 to 25% share of the total auto market in 5 years, Wood said. Tesla's stock, which is currently trading at $1,089, is expected to hit $3,000 by 2025, according to Wood. She believes Tesla's autonomous driving efforts have a 50% chance of succeeding, which she believes is the most significant component in getting Tesla shares to her $3,000 target. She believes that in the future, autonomous vehicles operating in autonomous taxi networks would make design less important than the vehicle's ability to transport people to their destinations. We believe electric car prices will fall below those of gasoline-powered vehicles and will continue to fall, Wood added. According to our current estimates, the typical electric vehicle would cost around $15,000 by 2026. Tesla isn't threatened by Lucid Group, Rivian Automotive, or other electric vehicle companies, according to Wood, who was responding to a listener's query. While she believes companies can succeed in the field, she believes Tesla batteries are 3 to 4 years ahead of its competition. She also points out that neither company is working on driverless vehicles, a field where Tesla may distinguish itself. Another issue Wood brought up was how efficiently Tesla handled the chip shortage crisis. Established automakers such as General Motors and Ford Motor Company functioned in a different situation than Tesla for much of last year. Because of a lack of computer chips, General Motors and Ford stopped one factory after another, sometimes for months at a time, leaving dealer lots empty and driving up car costs. Despite this, Tesla continued to set sales records quarter after quarter, ending the year with nearly twice as many vehicles sold as it did in 2020, despite the industry-wide crisis. Tesla will follow Apple in capturing the lion's share of its sector's revenues, Cathie Wood predicted. Apple recognized a cell phone as a computer long before Nokia, Ericsson, and Motorola did. Because Intel and Qualcomm were going with the volume players and Apple was nowhere, it created its own chip. It still has the lion's share of the earnings in the cell phone business because it designed its own chip. Despite the fact that the share price has dropped, its worth has increased. That, we believe, will happen to Tesla, the investing guru stated in a previous interview held. Many financial analysts and investors regard Tesla as a technology firm rather than a vehicle company. At least that's how they explained the company's stock price skyrocketing more than 300% in a single year starting in 2013. There are various similarities between Tesla and the tech sector. Tesla has embraced the tech industry's disruption mantra. Tesla, like other tech startups, is attempting to disrupt established business structures in the automobile industry by selling directly to consumers. Its product pipeline and founder have a devoted following, similar to that of well-known tech businesses like Apple. Even though Tesla's stock fell 31% from January 3rd to January 27th as technology equities were battered by rising bond yields and expectations of Federal Reserve interest rises, it has since recovered by over 11%. In a presentation, Wood said, "The essential thing to keep in mind is the long-term view that we invest in. We're looking at a 5-year plan. I've never seen an invitation on such a high level as it is now." For starters, many analysts are bullish about Tesla for the year 2022. For example, a Goldman Sachs analyst has released a bullish commentary for the stock, describing it as the unchallenged leader of the EV pack, with a target price of $1,200 and a buy rating. Daniel Ives of Wedbush Securities is bullish as well, with a target price of $1,400 and a best bull case of $1,800. Wedbush has given the company an outperforming rating, claiming that there's still market share to be consumed by electric vehicles and that Tesla has cleverly managed the chip shortage in 2021. There are a number of good and negative aspects affecting Tesla, and the stock's performance in 2022 will be determined by how they play throughout the year. Elon Musk may have to put a halt to his stock sales and focus more proactively on the launch of Cybertruck. China is a significant market for Tesla and electric vehicles in general. According to estimates, China will account for 40% of Tesla's deliveries in 2022, contributing about $400 to the company's stock price. If China's market is effectively managed, it might be a huge boom for Tesla. Experts believe that if China's strategy works out in Tesla's favor, no one can stop the company from setting a new high in 2022. Do you agree with Cathie Woods? Will Tesla control 25% of the electric vehicle market? Is Tesla the next Apple? Comment down below.